Hello, welcome to another episode of Financial Goldmine. Today, we discuss one of the most essential tools for managing money, checking accounts. Whether you're opening up your first checking account or switching to a new account, this video breaks down everything that you need to know, from the fees, features, money management, the pros and cons, and how to choose the right bank. By the end of this video, you will know precisely how to choose the proper checking account to meet your financial needs. A checking account is a bank account used to make deposits and withdrawals and is designed for everyday purchases. To open a checking account, you will need to complete an application and provide basic information such as your name, date of birth, unique identification number, which can be a social security number, alien ID card number, or ITIN, individual tax identification number, your contact information, government-issued photo identification, and in some instances, a secondary form of identification. And depending on the bank, you may be required to make an initial deposit. A joint checking account is owned by two or more people. Each owner can make deposits and withdrawals without the other owner's consent. People use checking accounts for everyday purchases, rent, mortgage payments, gas, food, and monthly bills. Most checking accounts can be opened with a small deposit, some as low as $25. You can access money in your checking account by debit card, check, ATM, mobile app, bank branch, direct deposit, wire transfer, and cashier's check. Most people use a debit card to make purchases. To withdraw cash from a checking account, you can use an ATM or go to the branch. Paper checks are not as common today as in the past, but some people still use them to pay rent, utilities, contractors, charities, and to give monetary gifts. A check includes the date, payee, amount box, amount line, memo line, signature line, routing, and account number. To write a check, you date the check in the top right corner and add the payee's name. The payee is the name of the person or organization that will cash the check. Write the payment amount in the box on the right of the check. Write the payment amount in words and draw a line in the remaining space. If you choose to, you can add a memo stating the purpose of the check. Finally, sign the check in the lower right-hand corner. If you are cashing a check, double check and ensure that everything on the check is correct. On the back, you will see endorse here. This is where you will sign your name in permanent ink. Some banks still require a deposit slip if you make a branch deposit. To make your deposit, complete all necessary information on the form. There are several advantages to having a checking account. First, it is very easy to access funds in a checking account through debit cards, ATM, checks, online transfers, mobile banking, and in person. Second, it is a great way to manage your money and quickly determine how much you are spending. A checking account is excellent for everyday purchases. Some people use a credit card for everyday purchases, but a debit card is currently the most common way to pay for your everyday expenses. When selecting a bank, knowing if it has an ATM in your area and how much you will be charged if you use a non-bank ATM is essential. If the bank does not have an ATM in your city, you can use a surcharge-free ATM. Another advantage is direct deposit. Direct deposit or electronic funds transfer is the most common method to receive your employer's paycheck. You provide your banking details to your employer, who will electronically transfer money into your checking or savings account. You may receive a physical check from your employer if you do not have direct deposit. In this instance, you will take your physical check to the bank and the funds will be available immediately or after a waiting period specified by the bank. Or you can deposit checks into your checking account using mobile deposit, which will prevent unnecessary trips to the bank. Another advantage is online bill pay. This service is offered by financial institution and allows customers to pay bills electronically through the bank's website or mobile app. This feature can pay many bills, including credit cards, utility bills, store cards, car notes, and more. You can also enable automatic bill payments. Automatic bill payments allow you to transfer money on a scheduled date to pay a recurring bill. Digital banking is the suite of online and mobile banking services provided by financial institutions, enabling you to manage your finances remotely. These features make banking convenient and easily accessible. Top digital banking features are online access, bill payment, remote deposit, online funds transfers, mobile banking apps, virtual cards, contactless payments, and more. Mobile banking is a service offered by financial institutions that allows you to access your bank account by making transactions using a mobile device like a phone or tablet. Through mobile banking, you can quickly perform banking activities on your phone. You can view your balance on a mobile app, make a transfer, pay a bill, use third-party services, apply for a credit card, and more. Another advantage is the ability to quickly transfer funds internally between accounts at the same financial institution and externally to accounts at different institutions. When making an internal transfer, the funds are usually available immediately. An external transfer is not as quick, but generally arrives within a few days. Another advantage is record keeping. Many financial institutions have features built into their websites that allow you to track your income and spending quickly. You can also set up financial goals. Today, it is very easy to monitor your financial progress by setting spending limits and viewing categories where your money is being spent. Security and protection are major concerns today because customers want to ensure that their money is protected, that the bank is doing everything possible to prevent crime, and that their personal information is protected. Most reputable banks are FDIC insured. FDIC stands for Federal Deposit Insurance Corporation. The FDIC provides insurance so consumers can rest assured that their money is safe. The criteria are: 1, your account must be at an institution that is a member of the FDIC. The product must be an insured product, like a checking account, for instance. And 3, the deposit amount cannot exceed the protection limit. The protection limit for an account owned by one person is $250,000. Have you ever made a miscalculation and discovered that your account was overdrawn? It can happen to the best of us. An overdraft occurs when an account does not have enough of an available balance to cover a transaction. And overdraft protection provides coverage when transactions exceed the available balance in your account. Using this protection, you can avoid rejected debit card or ATM transactions and bounce checks. With overdraft protection, you can link eligible accounts to your checking account, and funds will be transferred automatically if the account is overdrawn. Eligible accounts usually include savings accounts, credit cards, home equity, and personal lines of credit. Overdraft coverage refers to how a bank will handle ATM and everyday debit card transactions when a deposit account has a negative balance. If the overdraft item is paid, it may result in a paid overdraft fee. You can opt in and select the desired account that will be used in the event of an overdraft, or opt out by deciding that you do not want ATM and debit card coverage on the account. Another protection is fraud protection. If you think you have been a victim of fraud, quickly contact the bank and they will take the necessary steps to help you dispute any unauthorized transaction. Let's take a look at the cons. One of the top cons of a checking account is the low interest rate. There are always exceptions to the rule, but most traditional checking accounts offer little or no interest. Because of this, a checking account is a great way for everyday expenses, but should not be used to grow your money. We will discuss the best ways to increase your cash in another video. There are high-yield checking accounts that pay a higher than average interest on your checking account balance. With the ease of accessing funds, it is easy to overspend using funds in your checking account. With a debit card at your fingertips, it can be swiped in seconds. Too much swiping can harm you financially. With any account, it is always essential to make sure that you stay focused on your goals to avoid unnecessary spending. The final con is the potential fees associated with checking accounts, including non-sufficient funds and overdraft fees, ATM charges, transaction fees, wire transfer fees, and monthly service fees. It is imperative to avoid overdrafting your account so that you do not have to pay any fees. If you need to go to the ATM, using your bank's ATM is essential to avoid fees. Some banks do not charge a monthly service fee. Others will waive the fee if you maintain a minimum balance, set up direct deposit, or make a minimum number of debit card purchases. Now that you know the pros and cons of checking accounts, you are equipped with the tools to choose the right bank. All factors to consider have been discussed in this video: insurance, fees, interest rates, minimum balance requirements, ATM access, security features, customer service options, digital banking options, overdraft protection. All factors play an important part on your decision. Review the terms carefully to choose the right bank for you. And always remember, if you pick the wrong one, you can always switch banks. You will receive a bank statement once per month. Most banks allow you to go paperless, securely viewing, downloading, and printing your paper statements online. Whether opening your first account or looking for ways to manage your money more efficiently, choosing the right account can make a big difference in your financial life. Remember to compare fees, features, and benefits to find the best fit for your needs. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell to never miss out on more financial education. Are there topics you want to see on this channel, or do you have any questions? Drop them in the comments below and I'll gladly help. Thanks for watching, and I'll see you in the next one.